Chinese companies are moving their supply chains out of China to manage risks, with India, Malaysia, and Indonesia benefiting. Even Chinese manufacturers are shifting parts of their supply chains out of China to manage risks and heading to India and other nearby countries. Southeast Asian nations such as Vietnam, Thailand, Malaysia, and Indonesia have benefited from the shift. Some European countries and Mexico have also benefited from the supply chain shift. China has been the world's factory for over 4 decades, but that could be changing soon. Homegrown companies from the manufacturing giant are now following in the footsteps of Western countries who have already been moving their supply chains out of China since 2018. Geopolitical risks and rising costs are pushing Chinese manufacturers to look for alternatives. According to Xie Luo, a principal at consulting firm Kearney, a lot of China-based manufacturers are actively looking at setting up overseas productions with anticipation of the supply chain challenges and political risks. India, which is set to overtake China as the most populous nation by mid-2023, is likely to be a key beneficiary of the shift. Much of the supply chain shift is headed to nearby Southeast Asian countries such as Vietnam, Thailand, Malaysia, and Indonesia. Lower-cost havens nearer key consuming markets, such as Mexico for the U.S. market and Eastern Europe, are also proving popular. South Asian countries like India and Bangladesh are prime candidates for Chinese manufacturers to move to, thanks to their vast lands and young populations. Bangladesh, an apparel manufacturing giant, has attracted $770 million worth of foreign direct investment from China. While India is mainly positioning itself as an alternative for international manufacturers who want to diversify away from China, it is also trying to attract Chinese companies targeting the Indian market. Some Chinese firms, such as smartphone makers, are already operating manufacturing facilities in India. The shift in supply chains out of China is not limited to Chinese companies only. Foreign companies are also moving their supply chains out of China. The shift is driven by a combination of factors, including geopolitical risks, trade tensions, rising costs, and the need to diversify supply chains. The shift is likely to have a significant impact on China's economy and global trade, as China has been the world's factory for over 4 decades. The countries benefiting from the supply chain shift are likely to experience significant economic growth, as manufacturing brings jobs, investment, and infrastructure development.